We keep hearing about the booming economy and the fantastic stock market. All you have to do is look at the mainstream news to see the endless supply of articles telling you where to put your money. Of course, all of this is designed to ensure that you are a customer, a marketer's target audience, a statistic. But people don't realize it. They're busy doing their thing. Trouble is that their thing is obstructing their view. You came here for the truth, so let me unveil that for you. Today we're going to look at the real deal, the information that is important to you right now. I'm going to show you what's happening in the markets. We are going to look at the Fed repo, of course, expanding to a level that is absolutely absurd. No matter how you look at it, doesn't matter what the mainstream says, this is QE4. They are going full tilt. And why? Because the underlying system has hit the brakes. I'm going to also show you various things that are happening around the world because they are integral to the global economy, because it is absolutely essential. Let's get into it right away. Goldman Sachs predicts the Fed will make two big changes next week. So we do have a Fed meeting that's coming up, and of course everybody's been waiting for this moment. Will they cut or will they not? And that has always been the question surrounding every single Fed meeting, and no matter what they do, it never seems to be enough. They cut interest rates once. That wasn't enough. They cut interest rates again. That wasn't enough. Why? Because they haven't signaled more cuts coming at the next meeting, or at least outlining a path. They don't want to do that. They are saying they're data dependent. They are saying we're looking at the information as it comes, and that's not good enough for the market. They want to ensure that rates will hit rock bottom. Check this out. The Fed is expected to cut interest rates next week, but that would be the last such move for a while. That's according to Goldman Sachs, and I do think it's pretty ridiculous because the market is begging, absolutely begging for more cuts, not just one more. We are looking for significant cuts to come at this point. The market needs it, of course, because we need to expand the bubble even further. But what else is new? Fed officials are likely to say that this is the end of the quote mid-cycle adjustment that Jerome Powell alluded to in July. In addition, the central bank could remove the language stating that it will act as appropriate to sustain the expansion that has been in play since June. Well, we'll see if they actually do these things, because in my opinion these are very important to what they have been talking about for the last little while, particularly this line, act as appropriate to sustain the expansion. If you watch any of the statements made by Powell, he will mention it over and over and over again. Every time he is asked a question, he makes sure to add this line in there, and there is a reason for that. So we'll see if they take it out of their language at the next meeting. Of course, I will have a full update after that meeting occurs. Let's move on. Here's the newest numbers of the Fed balance sheet, and you can see that it has expanded yet again. Not as much as some of the previous weeks, but you can definitely see that it has been expanding week after week after week, and this has been a big change after a couple years of winding down that balance sheet at the slowest possible level. Now, of course, we will see this exceeding $4 trillion, and this is only the beginning. This is just the tip of the iceberg. Much more is coming our way. Now, to get into the Fed repo situation, I posted on the community or blog section of my channel earlier after this information came out, and of course you can see that it is $134 billion. If I take this, zoom in, I'll get my highlighter out here, you can see the amount that was accepted, $89 billion, and then at the bottom, $45 billion. This is absolutely insane. Remember that this is in one particular day that they did these actions. We're not looking at this along the course of an entire month. This has not been their entire bailout. This is in one day, and that just shows you the market requires the Federal Reserve to intervene on a daily basis at an unprecedented scale in order to remain liquid. That's all I'm trying to say here. This isn't a bailout like you would have had with AIG or the car companies that we saw, the TARP bailout and all of that. No. It is completely different than that. This right now is what happens when you have a problem in the underlying financial system. Here you can see the Treasury securities operations. Of course, all of this being directly from the New York Fed website. At the bottom, the amount accepted, 1.6 billion, and the amount that was submitted is over $9 billion. Just giving you an idea of all of the operations they're doing on a regular basis. I know a lot of people have heard me say this before, but I see the questions coming in constantly, and I want to make it very clear as to what the Federal Reserve is doing right now. This comes directly from their page, statement regarding repurchase operations from the 23rd, but I wanted to read it to you because, of course, this is what's going to happen for the next little while until they expand it again, and I wanted to bring this information to you so that everybody is on the same page. The desk released an update to the schedule of repurchase agreement repo operations for the current monthly period. So I want to make it clear, whenever they do these operations, we know beforehand what they are going to do. They lay it out. Now, if they're going to expand that, they make that public. That information is here. The statement comes out, and we know and we track progress. Consistent with the most recent FOMC directive to ensure that the supply of reserves remains ample even during periods of sharp increases in non-reserve liabilities, and to mitigate the risk of money market pressures that could adversely affect policy implementation, the amount offered in overnight repo operations will increase to at least $120 billion. The amount offered for term repo operations will increase to at least $45 billion. And of course, this is what they have been doing to allow maximum liquidity in, because, as I said, the underlying financial system has hit the bricks. I know a lot of people are worried about the jargon that they use at the Fed or any of these other institutions. You don't have to know all of the intricacies, especially with something like the Federal Reserve, because most of it isn't transparent to us, the people. They're not going to let us know what's going on. So make that very clear that all of this here is extremely convoluted, and it's done that way intentionally. Regardless, underlying all of this is that we have a serious problem. There are cracks, and we've gone beyond that. In fact, think of a leaky boat and the water is rushing in, and you're just shoveling it back out. Meanwhile, you should be plugging the hole. You should be fixing that leak, but that's not what they're doing. They are just trying to bail it out, and it never ever works. Here are the operational details for the repurchase agreements, the repos. Just wanted to give you the page where everybody should be checking up regularly to see the details. Should they be interested in this, you can also click on this button here, operation schedule and parameters, just to show you exactly what they plan on doing. There are limits that are set, and oftentimes they are oversubscribed. That's not a good sign, because it shows you that despite the fact that they are willing to allow so much, it's still not enough. So keep your eyes peeled on this page. All of the links for this video and all of my others are in the description under where it says sources, so definitely check those out. Here you can see the overnight repo operations, and it is beyond the expectations of many. This just gives you an idea of exactly how this has been over the last month. I already showed you the numbers directly on the New York Fed website, but essentially with the repo operations and the term repo operations together making $134 billion. To me, this is extreme, but according to the Federal Reserve, it isn't a big deal. And then we have the ECB, which is the second biggest offender in terms of the amount of intervention that they are doing in their markets. I mean, it's insane, the level at which they are willing to go to. I mean, it's crazy. But this is how Mario Draghi's last meeting went. This is the statement, and nothing unexpected, but I wanted to make it very clear. As decided at the last Governing Council meeting in September, net purchases will be restarted. That means QE coming back again under the Governing Council's asset purchase program at a monthly pace of 20 billion euro as from the 1st of November. So there's the asset purchase program. There's also the CSPP, which is basically buying corporate debt. And I really think this one is not understood by many. It's not just buying stocks, for example, but they're buying the debt of these companies. And if we didn't have this program in place, I think that there would be a lot of companies laying people off. They are literally supporting all of the biggest institutions in the Eurozone. They cannot withstand what has come thus far, and they need stimulus from the central bank. It's crazy, but that's what we're at today. According to Morgan Stanley, the negative rate experiment, if you will, around the world has effectively not worked. So we're hoping we're not going to mimic a policy that hasn't worked. I think it's pretty much understood at this point that the Federal Reserve is heading towards zero. Just like the ECB has done, once they got to zero, it was only a matter of time before they head lower. I have said this many times before that what has happened with negative interest rates has not shown any promise. It has not shown any success. Yet we constantly see how well they have done, how wonderful it has been that the ECB has saved the day. This is unfortunately not true, and yet it continues to persist. Russia's Rosneft has set the euro as the default currency for all of its new export contracts, including crude oil, oil products, petrochemicals, and liquefied petroleum gas, according to tender documents. So we have to understand what has happened here. This is a massive corporation, no matter how you look at it, and they are now going to price their products, including oil, in euro. Let's see how that goes, because we have seen historically a few examples where that did not end up very good for the leaders of those countries. This article here is talking about what's happening in Hong Kong. Basically, the economy is just being dragged down significantly because of all the activities that are taking place. Businesses are trying to run these really heavy sales in order to get things going again. A lot of people are now considering going out of business as a result. There's a lot happening. And that leads me into my next point. Here you can see what's happening just outside of Beirut in Lebanon. The banks closed for 7 days, and look what occurs. Country after country after country are finding themselves in the same position. It might spark for a different reason. You might have people who have grievances about one issue or another, but the point remains, and that is when people are upset, they take to the streets. In this case here, imagine if the banks closed for 7 days, people would lose it. And that goes for any major city. Stay tuned because it's only a matter of time. That's all for this video. If you found it informative, hit that thumbs up button. When you do so, you are supporting this channel. If you want to make money, if you want how to actually build a passive income business from scratch, this has everything you need. It's a free e-course, 100% free, teaching you how to sell on Amazon. It's available at the amazongps.com. Trying to understand what's happening in the financial system is essentially impossible, but if you can actually grasp the basics, the foundational principles, you are able to manage your money better. You are able to get a hold of what's happening in the daily events. I wrote these 2 books in a way that anybody at any level could read them and understand what's happening for their own situation. Check them out at the link in the description if you want the audiobook that's available at themoneygps.com. Well, thank you for staying until the end. Have you seen this video yet? If not, definitely watch it because it shows exactly what you need to know, and it definitely connects in with what we're talking about in this one. Click on it and I will see you there.